Good morning, traders. Welcome to today's live trading section with Vetexx. Okay, today we are going to be breaking down the synthetic market step by step, showing you what the market has to give to us. We analyze every synthetic pair today, and then we check if there's any trade we'll take for today. So if this is your first time of joining, don't forget to like this live, subscribe, and most importantly, join our Telegram community so that you don't miss out on any live updates that we are going to be having today. So first of all, I'm going to be sharing my screen with you all today, and you see, analyze the market together and see what the market holds for us. Okay, so I'm going to be sharing the screen right now. So we are going to be starting with the first pair on our list. Right, we're going to be starting with the first pair on our list, which is V91S. First pair on our list, which is V91S. So on the 24-hour time frame, on the weekly time frame is on a bearish trend, but on the 24-hour time frame, you can also see a bearish trend. Like I always explain, we are trading the advanced market structure, and this is how it looks like. If you go to the video on the playlist where I explain the advanced market structure, you'll find out that this is the pattern we look at for every day in the market. Okay, so this is the pattern we look at for every day in the market. So we have a sweep of liquidity here. We have our first break of structure. We have our protected high. We have price retracing back 50% to give us our continuation, our structural liquidity. And then we have price breaking down this newly created low to give us our second break of structure. And price then return back into this POI to give us to take out this structural liquidity and continue to the opposite direction. So this is basically what we trade every day. And once we get this pattern, we do our top-down analysis to check where price is coming from on the higher time frame and where price is going to on the higher time frame. So from that time frame, we'll scale down to the lower time frame to check if price has given us a continuation on the lower time frame, and then we execute. So that is basically what we do here every day. We come, we look at for our pattern. If you see it on the higher time frame, we go to the lower time frame. But to see it on the lower time frame, we get our continuation from there, and then we execute on the trade. So that is what we trade every day. And if you have been following me, you will understand that it's quite simple. You just need to give it your time, then you will be able to understand everything basically. So our first sweep of liquidity, price give us our protected high, first break of structure, price give us our structural liquidity. So this is our transactional liquidity and this is our structural liquidity. And then price break this first, the second structure. Okay, so this make it an A plus setup. Okay, so the same thing you look at for when you want to sell is the same thing you look at for when you want to buy. Okay, look out for this on the higher time frame. You come to the lower time frame, such as the 30 minutes, 15 minutes, and then look out for this on the lower time frame to execute your trade. So the higher time frame gives you the direction and the structure, while the lower time frame gives you your setup. So that is basically it, right? Now let's go to the V91S and let's check where the price is coming from on the higher time frame. Let's check where price is coming from on the higher time frame. So V91 is on the daily time frame. We have a sweep of liquidity right here. This is our sweep of liquidity. And then this is the protected high we are going to be using. And from there we have our first break of structure, which is this. Price retrace 50% to give us our structural liquidity, which is this. And then price return back to break the newly created low, giving us our second break of structure, which is this. And then we have this in our POI. This becomes our POI. So what does price need to do? Price needs to tap into this POI, which is our point of interest, and then set to the opposite direction. So this is the starting point from this POI, and this is the ending point in the POI. So it started from here, and then this is where price is coming to. Remember, this higher time frame is the direction where price is going to and where it's coming from. Where price is coming from and where it's going to. So now that we know the direction on the 24-hour time frame, we are not going to be executing on the 24-hour time frame. So we'll go to the lower time frame, which is we'll go to the other hourly time frame, okay, which is the 4 hour, 1 hour, to see if we have a continuation structure on that time frame. Okay, so now this is what to look out for on the 4 hour time frame. Let's see if you have any structure on the 4 hour time frame, because the 24-hour time frame has already given us the direction. You can see we have a sweep here, and then we have our protected high right here. From there we have our first break of structure, which is this. And then we have price retrace 50% to give us our structural liquidity, which is this. And then price break the newly created low, giving us our second break of structure, which is this. And this whole zone becomes our POI. So price will need to tap into the POI and set to the opposite direction. Now this is the starting point on a 4 hour time frame, and then this is the ending point. Okay, so we are going to be working with the 4 hour structure and make sure we sell from this point until price hits the target on this point. So what we are going to be doing now is we scale down to the 15 minutes time frame to check for this same pattern if it's going to appear on the 15 minutes time frame. So once we check on the pattern and then we see that price, the same thing appear on the 15 minutes time frame, that is when we are going to start executing on that time frame. Okay, because that is the time frame we use to find our setup, because we cannot execute trade on the monthly time frame, weekly, daily, or 4 hour because of some unnecessary drawdown that we might encounter. So now if you can see on the 15 minutes time frame, right? On the 15 minutes time frame, we have a continuation setup here, okay, which is this. It has already played out. So this is it. We have sweep of liquidity here. We have our protected high right here. We have our first break of structure here, and then we have our structural liquidity, which is this. And also we have our second break of structure, which is this. And then what does price do? Price retreats back into the point of interest and then continue to the opposite direction, which is this. So you see price take out the structural liquidity and stood to the opposite direction, which immediately it smashes its target. So it smashes its target. Okay. Now this is the second continuation that price give. I was about to call this trade yesterday in the community, but it didn't give confirmation that I expected. All right. If you watch the confirmation entry video I made in the playlist of this channel, right, you will understand that the confirmation that this price give is doesn't meet my own criteria. I don't know the type of confirmation you use, but if you took this trade, if you have been following and you understand everything I used to teach on this live section and you take the trade, you understand that it didn't meet my confirmation, but it might meet your confirmation. So if you know how to do this analysis, you should have taken this trade yesterday and made probably 1 to 5 RR or 1 to 4 RR, because using my system it gives a clean 1 to 3.5 RR. But unfortunately, I was not able to call it in the community because it didn't give a good confirmation. But it sold off quite okay. So this is it. I share the target and then return back. This is it. So it smashed the target, sweep of liquidity, first break of structure, rotated high, price retrace back to give us our structural liquidity and break the newly created low and tap into the point of interest and so to the opposite direction. So this was the trade we made yesterday on V90S because of our entry. Okay, now there is nothing happening on V90S at the moment, but the direction where it is selling to is still a bit far. So we are going to be sitting on our hands and watch until anything comes up, right? So we are going to be moving to the next pair on our list, which is V25 1S, which is V25 1S. So let's check out V25 1S and see. Okay, from yesterday analysis, what we did yesterday still stand. Okay, what we did yesterday still stand. So we can see that we have the trend is bullish on the daily time frame. Okay, it's bullish on the daily time frame, but then we have some continuation that we are anticipating, and these are the continuation. We have a sweep of liquidity here. We have price giving us our first break of structure, price retrace back 50% to give us our structural liquidity, and then price uh, move to the opposite direction. Now we're anticipating a price to come back into this zone, tap into the point of interest, and give us a 15-minute continuation. Then we can start executing on the trade. But if price didn't come here, price will like to respect the recent price action, which is this. So price will likely come to this zone. Right, this is our first sweep of liquidity. This is our first break of structure. Price retraces back 50% to give us our structural liquidity and then giving us our second break of structure. Okay, so we're anticipating price to come into this point of interest, give us our 15-minute continuation, which is like this. Give us our 15-minute continuation, which is going to be like this, which is going to be like this. So once price gives us our 15-minute continuation like this, then we anticipate entry when it don't tap to our POI. So that is basically what we are anticipating, and hopefully price does that. But until then, we'll be on the lookout. So this is exactly what you're anticipating on V25 1S for the past 2 days now. So once it does that, we will take the trade, and I'll keep you guys updated in the community. So the next pair you are checking out is volatility 75 1S. Let's check what volatility 75 1S has for us today, and let's check if there's something good on that pair. So starting from the weekly time frame, volatility 75 1S is on a bearish trend, but on the 24-hour time frame, it has given us a structure that we can use as a direction on the 24-hour time frame. So from the 24-hour time frame, we'll go to the 4-hour time frame. If there is a structure there, then we can look for continuation on the 15 minutes time frame. So clearly you can see we have a sweep of liquidity here. So the first sweep of liquidity, we have our protected high, which is this. Now price retraces back to break the first low, which give us our first break of structure. And then price retraces 50% to give us our structural liquidity, which is this. And after the structural liquidity, price retraces back to break the newly created low. And this newly created low that has been broken, it can give us our second break of structure. So we consider this directional bias as an A plus setup. Okay. So now that we know where price is coming from and where it's going to, this is the direction. This is where price is starting from. This is the starting point, and this point right here, this below, this low below is going to be the finish point. So this price is going to sell until it take out this low. So now that we've gotten our 24-hour direction, we'll go to the 4-hour time frame and check, or the 1 hour time frame, and check if there's anything on that time frame. So currently what we have is this. On the 4-hour time frame, we have price giving us a sweep of liquidity. Let's check if this is valid. We have price giving us a sweep of liquidity, which is this, and then this is our protected high, which is this. So price retraces back to break the newly created low, giving us our first break of structure, which is this. And then we have price retrace 50% to give us our structural liquidity, which is this one right here. And then price retrace back again to break the newly created low, giving us our second break of structure, which is this. Now this has been considered as an A plus continuation. Okay, so we wait for price to tap into this zone and then give us a continuation setup on the 15 minutes time frame or on the 30 minutes time frame. So this is what we anticipate at the moment on V75 1S, because that is the only recent. This is the only recent point of interest on V75 1S. So we are going to be waiting for this until that happens. Then we don't have anything currently on V75 1S. So we anticipate a move like this to come here, give us our continuation on the 15 minutes time frame. Then we'll be able to start executing until price take out this newly created low, which is this. So this is what to anticipate on V75 1S. So whenever this happens, we are going to start taking more trade on this pair. So until then, we need to know if price is going to hold at this point before we start jumping on any trade. So currently, even if you see a setup on a 15 minutes time frame, there's higher chance that the trade will not hold. As you can see, there's a 15-minute structure here. Let me show you. There's a 15-minute structure below here, but it's not going to hold because you don't know where the price is coming from on the 4-hour or the 1 hour structure. You can see that it's been invalidated already. So imagine you set your entry limit on this place already. You're already stopped out. So that is why it's good to always follow the trend. The 24-hour time frame gives you direction, but the 4-hour time frame is more accurate. It gives you that structure that okay, this is at this point you need to start looking for your continuation on the 15 minutes time frame. Okay, the 24-hour time frame retracement is going to be the 24-hour time frame retracement doesn't really hold it always hold the 15 minutes time frame. So retracement is not that the setup you are seeing on the 15 minutes time frame is wrong, but once you know where price is going on the 4 hour time frame, it will be more the trend, the price will respect that your continuation more than when you are seeing a lower time frame continuation on the 15 minutes time frame. So you need to work with a weekly time frame, daily time frame for your direction, and then you start executing trade once you've gotten your 4 hour or 1 hour structure. Okay, then you go to the 15 minutes or 10 minutes time frame to execute on those time frame, which are the lower time frame. Now, this is what you're anticipating on V75 1S, the price to come into this zone. So once price come into this zone, then we can start looking for a 15-minute continuation then. But if price doesn't, we are not going to take any trade on this V75 1S. So the next we are checking out is V15X, volatility 151S. That is the next pair we are checking out. Starting from the 24-hour time frame, V151S is on a bearish move. It's on a bearish move, but there is no structure on there's no direction on the 24-hour time frame using our trading model. So let's go to the 4-hour time frame and check if we find something tangible on the 4-hour time frame. So this is on the 4-hour time frame, price is giving us a sweep of liquidity here, and then our first break of structure, which is this. After after the price has given us a protected high, which is this. Now we have price retrace 50% to give us our structural liquidity, which is this, and then we have our second break of structure, which makes this an A plus structure on the 4-hour time frame. Now this zone becomes our point of interest, and price needs to come into this zone, tap into the point of interest, and sell to the opposite direction. Okay, now this is the starting point, and this is the finish point. This below right here is the finish point. Now what do we do next? We go to the 15 minutes time frame and check if there is a 15-minute continuation setup. But unfortunately, there is nothing like that on the 15 minutes time frame. So we anticipate a move like this on the 15 minutes time frame. Let's see if it's going to do something like this later on today. So this becomes our sweep of liquidity. This becomes our protected high. This becomes our structural liquidity, our first break, second break, and we anticipate price to come into this zone and then tap into our point of interest and then sell to the opposite direction. So that is what we'll be anticipating on V15S today. So aside from that, there's nothing happening on V15S. So we'll move on to the next pair, which is V31S, So starting from the 24-hour time frame, V31S has been bearish. So from the 24-hour time frame, we'll go to the for the weekly time frame, it has been bearish, but after the weekly time frame, we'll check the 24-hour time frame. If we have a direction from the 24-hour time frame, then we can be able to follow it. So if you look closely, you see that we have a sweep of liquidity on this 24-hour time frame, clear sweep of liquidity, which is this. Then we have our protected high, which is this. On the protected high, we have our first break of structure. Because after price give us the protected high, it retraces back to take out the newly created low, so that we have our first break of structure, and then we have price retrace, do all of these things, give us our structural liquidity, which is this, and then price retrace back to break that low, giving us our second break of structure, which is this. And what does price do next? Price retrace back into the point of interest, take out this structural liquidity, which is used for continuation, and then is sold to the opposite direction. So this is our point of interest. This is the point of interest, and then this right here is where price starts from, and then this is the target. The target is down below. So now that we know where price is going to on the 24-hour time frame, we'll go to the 4-hour time frame and check if there's a continuation for us on the 24-hour time on the 4-hour time frame. Sorry. So this is what you are going to do. Now the 4-hour time frame, you can clearly see that we have a structure on the 4-hour time frame, which is this. First of all, sweep of liquidity, which is this. Price give us our first protected high, which is this. Retrace back, take out the newly created low to give us our second break of structure, which is this. Price retrace 50% to give us our structural liquidity, which is this zone right here. And then price retrace, break the newly created low after the structural liquidity, giving us our second break of structure. And this zone becomes our point of interest. After this point of interest, price has tapped into the point of interest, and then this is the finish point. It's going to start selling from here, going to start selling from here, and then this is going to be the finish point. Okay, from here to here. So now after price has given us this on the 4-hour time frame, this is the only time we'll go to the 15 minutes time frame and check if we have a continuation on the 15 minutes time frame. Currently, there's nothing happening on the 15 minutes time frame. I saw this setup here during yesterday live analysis, but I said we should skip it. That the price might not hold, and this is what it happened. This is what happened. At the end of the day, if you try to set limit entry, you still be stopped out. All right. The price didn't hold because this setup was the first setup on the higher time frame, and once you are seeing price on this time frame just like this, the first setup you are going to see right at the same POI, the price tap into the same zone. It's always okay to avoid it and wait for another setup to form below that POI when price tap into your POI, right? So that is the reason why this price is so, because most of the time a price doesn't hold unless when price start moving in this direction. When price tap into your POI just like this, you need to allow it to move from that POI and then give you your continuation a bit below that POI that is formed, and then that is the only chance. That is the only time it might hold. So yesterday there was supposed to be a setup I'm supposed to share to the community, but then price didn't give confirmation again, so I was not able to share this live trade with you. So this is a sweep on the 15 minutes time frame. These are protected high. This zone here becomes our first break of structure, and then price retrace 50% to give us our second break of structure, which is this. Let me cancel this. So this is our structural liquidity yesterday. That was the structural liquidity we used, and then was it this? Okay. So if you look closely, this look like a type B setup. There's something I'm trying to look out for, but I can't see it again. The noise is just too much on this lower time frame. But this is a sweep of liquidity. This was our first break of structure, which was this. Price gave us our first break, but it didn't give us our second break, which makes this a type B setup. Structural liquidity, and then this is our POI. So price tap into it, sell to the opposite direction, smash it to target, and then if you have taken your profit here, good. But if you decide to hold this trade, you might lose all the money back to the market. So this was what happened yesterday. So this was the setup. This was the trade yesterday. Okay. So this is what we had yesterday on V31s, but I was not able to call out the trade because there was no confirmation on the trade. So I just let it pass. So the next pair we are going to be checking out is step 500. Step 500 index. So starting from the weekly time frame, step 500 is bearish. It there's this weekly time frame direction on a clear weekly time frame on step 500. So now that we know that we know where price is going to on the weekly time frame, but on the daily time frame, step 500 didn't give us any direction. So we are going to be working with the 15 minute, the weekly time frame. Okay. Now that we know where price is going to on the weekly time frame, the next thing for us to do is scale down to the 4 hour time frame and check since there is nothing on the daily time frame. So first of all, you can see we have our sweep of liquidity. This is the sweep of liquidity. We have our protected high. We have price retracing back 50% to give us our first break of structure, which is this. And then price retracing 50% to give us our structural liquidity, which is this. And we have this entire zone becomes our point of interest. Now after getting this point of interest, we have price retrace back to break this second low, giving us our second break of structure. Okay, after this second break of structure, now price retrace back to take out the structural liquidity. The structural liquidity is used for continuation. So after taking it out, it's sold to the opposite direction. And this is where it's going to sell to. The starting point is in this zone, then the finish point would be this zone. All right. So for those of you that always watch this live on replay, you need to make sure to subscribe to the channel so that you'll be getting notification whenever I'm going live, so you don't miss out on the live analysis, because there are some things that might do here that might confuse you. So for you to be able to keep up with the live analysis, you need to subscribe to the channel, turn on your notifications so that whenever I'm live on this channel analyzing the synthetic markets, you can be able to ask any question that is confusing you. So that is what you need to do to keep you in check. Okay. So moving on, we'll go to the now that we've gotten our structure on the step 500 on 4 hour, we are now going to the 15 minutes time frame to check out for continuation setup. So let's go to the 15 minutes time frame and out check it out if there's something you can see clearly. Okay. Now on the 15 minutes time frame, you can clearly see we don't have any structure on the 15 minutes time frame. We don't have a continuation setup on the 15 minutes time frame. Okay, there's nothing happening currently. I want to go to see, you don't need to force trade whenever you are looking for setup in the market. Allow price to always come to you. Okay, so we don't need to force anything here. So you can see clearly that nothing is happening on the 15 minutes time frame. So what do we do? We'll go on to the next pair because there are more opportunities. Okay, now let's go to the next on our list, which is step 100. Let's analyze step 100 and see if you are going to see something on step 100. So on step 100, we go to the 24-hour time frame and check if there's something happening on the 24-hour time frame. So on the 24-hour time frame, clearly you can see that the trend is on a bearish move. On the weekly time frame is on a bearish move. So let's go to the 4-hour time frame. If there's anything we can anticipate on the 4-hour time frame. Okay, so on the 4-hour time frame, just like yesterday, we have a sweep of liquidity, which is this. Now we have our first break of structure, which is this. From the first break of structure, we have price retrace 50% to give us our structural liquidity, which is this. And then we have price retrace 50% to give us our second break of structure, which is this. Now this is considered as an A plus setup, and this right here is our protected high. So after the protected high, we have our point of interest. So we anticipate price to come into this zone and then give us our 15-minute continuation, which is this. We anticipate price to come to return into this zone, give us a 15-minute continuation like this, something like this. We anticipate this move on the 15 minutes time frame after price tap into this 4-hour time frame. So this is what we are going to be anticipating. The moment price tap into this 4-hour zone on the 4-hour time frame, then we'll scale down to the 15 minutes and look out for something like this for this same structure that we'll find out on the hour time frame, so we can be able to anticipate on this trade. This should be simple. That's why you need to be active live here every day so you don't miss out on important things like this you need to learn. But regardless, whenever price give us a structure on the 15 minutes time frame, I will always do well to follow up in the community so that in those of you that are not always active to join the community, you come and learn from this, this section. All right. So let's move on to the next pair, which is because currently there's nothing on step 100. So let's move on to the next pair, which is uh, V10S, volatility 10S. Okay, volatility 10S on the weekly time frame is bullish, but on the daily time frame, you can see there's a deep retracement on the daily time frame, and from there, you can clearly see that there's nothing happening on this pair at the moment. There's nothing happening on this pair at the moment. Okay, let's go to the 4-hour time frame. If we see a 4-hour buy, all the move we've anticipated has been invalidated. So we'll still be on the lookout. Whenever something comes up, I will update every one of you in the community and let's just see how it goes. So there's nothing happening on V10S currently, but it's going to form a structure on the 4-hour time frame, definitely. But just that we don't know when. The best thing for us to do is just to sit on our hands and wait for a better opportunity so we can strike. Now, looking at V100 index, we have we have been anticipating price to tap into the daily time frame zone for a very long time now, for like 2 to 3 days now. But then we are still going to be sitting on our hands and watch for it to happen. So first of all, you can see we have a sweep of liquidity right here, which is this, and then we have our protected high, which is this, and price retrace back to take out the newly created low, giving us our first break of structure, which is this, and price retrace 50%, giving us our structural liquidity, which is this, and price break the newly created low, giving us our second break of structure, which is this, and then this becomes this ozone becomes our point of interest. So what do we anticipate? Remember, this is the 24-hour time frame. And what it does is that it gives us a continuation on the 4 hour. It gives us a direction of where price is coming to and where price is going to. So once you tap into this zone, we will anticipate a 4 hour continuation like this. Anticipate a 4 hour continuation like this. So once the 4 hour continuation is confirmed, we anticipate a 15 minutes setup, which is going to be something like this. So now we are going to start taking more of this trade continuously on the 4 hour time frame. So the 4 hour time frame is going to be like this. So after the 4 hour time frame form, we now anticipate another continuation setup, the same pattern you look at for on the daily, you look at for on the 4 hour, and then you look at for it on the 15 minutes. Then we'll start taking this continuation down until this finish point on the 24-hour time frame is taken out, and we'll be done with the pair. Okay, so if you are following or if you have any question, you can drop your question in the comment section and I'll do it to answer every one of it. Okay, now moving on to the next pair on our list today, we have V75 index. Let's check out V75. What do we have on V75 index? Starting from the weekly time frame, V75 index is on a bearish move and it's been selling for a while. So let's go to the 24-hour time. On the 24-hour time frame, it's still on a bearish move. So let's go to the 4-hour time frame and check if there's anything on the 4-hour time frame. Let's see what it has for us. So on the 4-hour time frame, let's check for this retracement if it is up to 50%. So using our Fibonacci retracement tool, we check. No, it is not up to 50%. Okay, it is not up to 50%. So let's look out for the most clear continuation that we are going to be anticipating. Clearly, you can see, I analyzed this yesterday. You can see that we have a sweep of liquidity here. After the first sweep of liquidity, we have our protected high, which is this. After the first protected high, we have structural liquidity. Price retrace 50% to give us our structural liquidity. After the structural liquidity, price retrace back again to break the newly created low, giving us our second break of structure, which is this. Now, this is our first break of structure, which is this. Okay, and after that, we have price retrace 50%, and this is our point of interest. So, what do we anticipate now? We anticipate price to go back to this zone and then give us our 15-minute continuation so that we can start taking more entry on the lower time frame. Okay, so this is what we're anticipating on V75 index at the moment. So we hope price respects our speculation and then we'll be able to take more trades and make more money from this pair today or in the next few days. Okay, but until then, we'll be on the lookout. Next is step 300. On step 300, we don't really have anything going on step 300 at the moment. So on a daily time frame, we can't find a continuation on step 300 and we won't force any continuation. On the step 400 on 4 hour time frame, still yet we don't have anything tangible on step 400 on the 4 hour time frame. So let's check 1 hour time frame if we have something that we can anticipate. Okay. Still yet, we don't have anything to anticipate on the 1 hour time frame. So let's move on to the next pair. We have V50. Okay, we have V50. So on the V50, starting from the weekly time frame, V50 has been bearish, so bearish. If you look closely here, you see that we have a sweep of liquidity feeding here, and then we have our protected high, which is up here, and then we have first break of structure, which is this. Price retrace back 50% to give us our structural liquidity, which is this. Then price retrace 50%, price retrace back again to take out the newly created low, giving us our second break of structure, which is this. Now this becomes our A plus continuation, our A plus directional bias on the daily time frame. Now what do we have next? We have our point of interest. This becomes our point of interest. And after this point of interest, we have our point of interest. Now after this point of interest, price enter this zone on the 24-hour time frame and start selling to the opposite direction. Now this is the starting point, and this zone is going to be the finish point. Okay, this is the starting point, this is the finish point. So on this starting to the finish point, we'll go to the 4 hour time frame and check if we have anything that we can anticipate at the moment. So let's go to the 4 hour time frame and check briefly. Okay, we had a continuation here that was taken, that already respected the structure, and it has already smashed to its target. It has already sold to its target rather. And then we have our protected high here. We have our strip of liquidity, which is this. You should already understand this by now. If this is not your first time of joining this live, okay. First of all, we have our strip of liquidity. We have our protected high. Price retrace 50%. Price retrace back to take out the newly created low. And this was gives us our first break of structure. Price retrace 50% to give us our structural liquidity that will be taken out. So immediately price cross this liquidity zone, is going to start moving to the opposite direction because liquidity is what pushes the market. Okay. Now this becomes our second break of structure, which is this. Okay. After the second break of structure, we have price move to a direction. So this is the direction on the 4 hour time frame. So if we would have, if we get to the 15 minutes time frame, you see that there are trade that we would have taken. Okay, there are some trade we would have taken. So right now, this 4 hour time frame, we don't have any business with it anymore. So the next we are going to check out is step. We are going to check out the 1 hour time frame. So we have been anticipating a move on the 1 hour time frame, which is this. You can see clearly we have our first break of structure, which is here. Sorry, strip of liquidity, which is here. And then we have a protected high, which is here. And then price retrace back to take out the new created low, giving us our first break of structure, which is this. Okay. And price retrace 50% to give us our structural liquidity to be taken out, which is this. And then we have the second break of structure, which is this. Now this is an A plus setup on the 4 hour time frame. So after getting the setup on the hourly time frame, we'll go to the minute time frame. All right, so that we will now take our continuation entry. So on this 1 hour time frame, we're anticipating price to come to move anyhow it want to move like, and then come into this zone. Once price tap into this zone, it will start giving us, it should start giving us 15-minute continuation. That is when we can start executing on those trade, because We don't want to be holding trade for days or for week. As a day trader, we take trade today and then maybe 24 hour we can close the trade. That is why we always go down to the 15 minutes time frame. So on the V50, this is what we're anticipating on V50. Okay. So the next pair on our list we're going to be checking out is V100S. Let's check out V100S and see if there's something on V100S. So on V100S we have this. On the 24-hour time frame we have on the weekly time frame V100S has been so bullish on the V100 on the 24-hour time frame. As in bullish on weekly, bullish on 24-hour. So the next important thing for us to do now is to check the 24-hour time frame. Currently on the 24-hour time frame, nothing is happening. So we'll go to the 4-hour time frame and check if there's something happening on the 4-hour time frame. Good, good. So remember we are anticipating a move like this yesterday on the 24-hour on the 4-hour time frame. Okay, like I said, we have our super of liquidity, which is right here. Okay, then price give us our first break of structure after taking out the newly created high, which is right here. And then price retraces 50% to give us our structural liquidity, which is right here. And then price retraces back to take out the newly created high, which is right here. Now this becomes an A plus setup on the 4-hour time frame. And this is our protected low. So this zone now becomes our point of interest, our point of interest. Okay, so once price tap into this zone on the point of interest, it's going to start giving us a 15-minute continuation, which is going to be something like this. Come into the POI, it's one POI that is going to create and sell and buy to the opposite direction. So once price return back, this is what we should be anticipating on the 15 minutes time frame. Come into this zone and then buy to the upside. You can see how simple this is. Buy into the and buy to the upside. Okay, this is what it's going to start doing. This is exactly what it's going to start doing. So on the 4-hour time frame, we anticipate price to this is the 4-hour time frame structure we're anticipating. So it's going to move, and come to this zone. Once you come to this zone, then you start. Let me take this out. We anticipate price on the 4-hour time frame to move, and come to this zone. Once you come to this zone, it's going to start giving us continuation like this on the 15 minutes time frame. You might see up to 3 to 4 continuation before price take out the target. So this is what we're anticipating on step 100 index currently. Now we are done with step 100. The next pair we are going to check is step 200. Let's check out step 200 if there's anything on step 200. Currently we don't have anything on step 200. I analyzed this pair yesterday and we don't really have anything on step 200 unless the 24-hour time frame continuation that we have been anticipating for days now. So this is actually going to take weeks before price gets here. Weeks, if not months, before price gets here. I hope you all are following. First break of structure and then second break of structure. This is easily being spotted. If you understand this, you can easily spot it anytime, any day. And this is our 24-hour point of interest. So we anticipate price to come into this zone. All right. Anticipate price to move and come into this zone. After coming into this zone, give us a 4-hour continuation structure, and then we'll go to the 15 minutes time frame to start selling until you take out the higher time frame target. All right. So currently we don't have anything on step 200 at the moment. Now let's go to the next on our watch list, which is going to be step 400. So on step 400, let's check out what's happening on step 400. Let's start it from the 24-hour time frame. Starting from the 24-hour time frame, step 400 is retracing on the 24-hour time frame, more like a bullish trend. But right now, it hasn't given us anything, so we don't know yet. We all know that it's bearish on the daily, bearish on the weekly, but on the 24-hour, is giving a bullish move. So hopefully, with hope, it retraces back and give us a 4-hour structure. Then we can start taking continuation on the 15 minutes time frame. So there's nothing happening currently on step 400. Now let's move on to the next pair on our list, which is V51S. On V51S, we have, let's check this out. On the weekly time frame, price has smashed its target, and on the daily time frame, nothing is happening currently. So we'll go to the 4-hour time frame and check if there's something happening on the 4-hour time frame. On the 4-hour time frame, still yet we don't have anything happening on the 4-hour time frame. You can't really spot any structure on the 4-hour time frame. Nothing is being spotted yet. It's just it's just there. So if you look closely, it's just there. And we won't start forcing any setup, because once you force a setup, you know that you are no longer meeting your criteria. And that is going to make you to incur more losses. Okay. This was supposed to be a good setup, but it was invalidated. And we can't really go to the 15 minutes time frame to start looking for continuation when we know that okay, what we are looking for is no longer there anymore. And the next thing that's going to happen when you start forcing it is you begin to start taking losses upon losses. And that is not what we are here for. Okay. We're looking for quality over quantity. So there's no need to rush a trade or start taking unnecessary decisions. So let's go to the next on our list, which is last but not the least, we have V25 volatility 25 index. So on this volatility 25 index, we have a move. We have a 24-hour move yesterday, but it got invalidated. On the 24-hour time frame, there is nothing happening, but on the weekly time frame, V25 index is bearish. So let's check if we have where this price is reacting from. So currently, we can't really tell where this price is reacting from. So we can't tell where this price is reacting from. We had this yesterday, where it got invalidated. That is why it's always advisable for you to wait for the direction on the daily time frame, weekly time frame, and most importantly, where it's coming from on the 4-hour time frame and where it's going to on the 1-hour time frame. So you can go to the 15 minutes time frame and execute your trade. So on a normal day, other trader would have set limit entry here, but they will go stop at because it hasn't given them a lower time frame continuation. So lower time frame continuation work better with the hourly time frame, but the hour time frame gives you the direction. I hope you understand that. So this is what's happening currently on step on V volatility 25 index. All right. So this is the first time of joining this live, and you always watch the replay. I The best thing for you to do is subscribe to the channel so that you don't miss out on daily life analysis, so that you can always ask your question whenever we are all live together, and then you understand exactly what you're always doing here. So on this channel, we go live every day to analyze synthetic indices. So this is a live synthetic indices trading section. So we go live here every day and show you step by step how to analyze synthetic indices market, and we'll also take the same trade with each other. Okay, so if this is your first time, don't forget to like this video, don't forget to subscribe, and most importantly, join the Telegram community. And if you are wondering which broker do I use to trade synthetic indices, it's the name of the broker is Deriv Synthetic Indices. Okay, Deriv. The name of the broker is Deriv. The link to register is in the description of this video, and the link to join the Telegram community is also in the description of this video. So do well to join, and don't forget to So and don't forget to share this live session on your WhatsApp status, share it on Instagram, Facebook, Twitter, and everywhere you can see that people are going to. Those that are interested in joining live can always join the live session whenever we go live, and then we'll all make money together. We stay locked in 2026, and I can't wait to see you tomorrow. Same time, same place, same markets every day, Monday to Sunday, every week. Okay, so that is what we do on this channel. So I can't wait to see you tomorrow. Have a blessed day. And if there's any setup comes up, I'll do it to share it in the community, the Telegram community. That is why you need to join. The link to join the Telegram community is in the description of this video. And I can't wait to see you all tomorrow. Don't forget to come with your friends, your family, and your loved ones that are interested in trading. And I'll see you on the other side. Do have a nice day. Bye.